Hey everyone, and welcome back to the Your Money Your Life podcast, episode 233, I believe it is. Yes, I think we're in episode 233 of the podcast. Before we get into it, make sure you like, subscribe, five-star rating the review, the podcast, wherever you're listening. We'll jump into the week and first look at the market and what's been going on, really just globally, but focusing really on the big items of this market because there's actually been some movement that will probably be good for people to keep their eyes on. Let's dive right into it. First and foremost, if you see here, let's make sure we are fully able for all of our viewers on YouTube to see everything. Of course, if you're watching on YouTube, like, subscribe, comment, review. Um, Yesterday was actually a down day for the market, and there's a few reasons why. I think people were taking a breather from a lot of the tech heavy investments, which has really driven the market higher. A lot of a breather was taken from the Nasdaq, right? So the Nasdaq was probably showing roughly 2% down, if I'm not mistaken. But it was really the people taking a breather, correction, a pause in the rally that we've been seeing over the last several months. So it actually brought us about close to 1% down over the week on a weekly period here over 5 days, trading days. If you look at the past month, though, market's still showing strong gains over 2.5%, even with yesterday's dip. Pre-market now is showing a little bit higher, the futures trading so far. So again, still strong. I think the main culprit for yesterday's rally was, a breather from the big rally we saw. Again, the Nasdaq tumbled 2.8%. That was the worst day for the Nasdaq since December 2022. Um, and again, this is par for the course for market cycles and things that are going to happen in the market. You don't just see the market be green, green, green every day for the foreseeable future. You will see some pauses, you will see some pullbacks, you will see some tumbling every once in a while. The blue chip Dow, the Dow Jones, which has less exposure to tech, we know it has less exposure to tech names, the Dow Jones index. It actually traded well yesterday. The 30 stock index gained 243.6 points or 0.6%, closing above 41,000 for the first time ever. So Wall Street, again, is taking a breather from some of the AI plays that at least yesterday they did. Investors are looking for other concerns, right? We're looking at inflation, we're looking at a Fed potential pivot, and we're looking at how earnings will come when we see earnings for Q3. So big things, and economic data is probably one of the biggest drivers of the market right now. Initial filings for unemployment benefits surged last week, while continuing claims hit their highest level since 2021. That's from the Labor Department. So jobless claims total 243,000. So again, showing the weakening in the jobs market, which is one of the factors that the Fed is going to look at in culmination with the others to determine, if there should be a pivot, if interest rates should stay flat, if they should lower. So those are pretty much the big things going on economically in the market. We'll see how today trades. Again, investors took a breather yesterday. That's par for the course. We'll see how today trades. I think, we're looking at a somewhat of a rebound a little bit in the pre-market trading. We'll see if that holds an actual trading period. But if you can't deny this year, the market's done really well so far, right? And we're over halfway through the trading year, and so that's just fact. And we'll see how things trade. These have different areas, different asset classes, crypto doing well this year, and all different things. There's an Ethereum ETF coming down the pipeline as well. So much to see on the market. Let's jump into current news. Big news is that Elon Musk is planning to move his company SpaceX and his other company X to Texas. There was something that came out and he tweeted he's moving headquarters of X, which used to be Twitter, and SpaceX. He's obsessed with the letter X, and he's moving him to Texas from California. So this relocation is kind of big news. He's encouraging others to make that move, meaning move their headquarters, other CEOs, founders, company owners, to move their headquarters to out of California, which California is actually one of our richest states, if not the richest, up there with New York, of course. So he's telling companies, move your telling CEOs, move your company out of California into another location. Seem pretty adamant about it. We'll see what that means. If there's more dominoes to fall with that, I don't think there will be. I don't know how. cumbersome it is to do that? Is it just a filing change, a lawyer change? Is it actually moving? Because I mean, they're not. Are they leasing those buildings? Are they owning them? Are they going to have to relocate everything? It's going to be a big, interesting to see how he does that, how he implements it in practice rather than tweets it. We'll watch that. One thing that caught my eye this week is the media day for the WNBA. We've talked a lot, I think a little bit, not a lot, about Caitlin Clark, about Angel Reese, about WNBA. They were college stars, moved to the WNBA. Of course, we know that the pay for WNBA players, because the league is not profitable at this moment, was a lot lower. So people were surprised that they saw draft picks for the WNBA making X amount of money. Was it 70K or whatever amount it was per year? Um, Versus, of course, the NBA money, which is not a comparison. It's not the right comparison. The NBA makes billions and billions of dollars. WNBA doesn't make any money, and that's just a fact. Now, any profit, I should say. It makes revenue, but again, minus the expenses, there's no profit in the WNBA as of now. So now the WNBA is inking a new media rights deal. So the big one of the big reasons ways these leagues, NFL, NBA, WNBA, makes money is through their legal media rights, meaning the ability for broadcasters to have exclusive rights to play their games, to broadcast their games, and of course, if you have the exclusive rights, you can do advertisements within those games and earn your money back that way. So the WNBA is riding on its spiking popularity to a massive payday. The league is set to secure 2.2 billion in media right deals over 11 years. This is reported by The Athletic. This amounts to at least a fourfold increase from the current deal. So the current deal's 4x less. This will be a 4x increase. It still pales in comparison to the 76 billion that the NBA had, right? Because the NBA more popular, more eyes, more stars, more people watch. That's just a fact. And so that's coming down the pipeline, but it will raise the pay for the WNBA players. Speaking of someone myself, I'm a WNBA agent. This will raise the pay for the WNBA players, right? Because they get paid in large part by basketball related income. Media rights for the WNBA league, all those different things, merchandise, all that stuff goes into basketball related income, which will be split between owners of the teams and players. And so this is going to be huge for them when they get this deal done because you will see a new raises for WNBA players because the salary cap will increase, right? The salary cap will increase, and this will allow for them to pay players more. So really cool to see that, and really cool to see definitely where sports are going, right? As someone that's an agent representing top players, it's cool to see where sports are headed because it's such a big part of our lives and will continue to be. So it's just only going to get bigger and bigger going forward. Let's jump into something that's been getting bigger and bigger every day. Prime Day. Amazon's Prime Day. This is the first day of Prime, marked the biggest e-commerce day of the year so far. It raked in more than 7 billion across US retailers, an 11% jump over the last year's event. This is according to Adobe Analytics data. So the biggest sellers during Prime Day are electronics, especially headphones, TVs, and fitness trackers. Spending on back to school items more than doubled. So again, we know Prime Day is a big thing for a lot of people. It's giving a boost to online retailers. Shoppers have already spent 7.2 billion. So is it? I think Prime Day is 2 days, if I'm not mistaken. So we've missed some of it. It's 16th and 17th, if I'm not mistaken. So they're seeing the data come in, and people are spending. People love Prime Day. People love a deal. And it's coming across that there's a big boost in spending as compared to last year. Um, some retailers are hosting their own competing deals to get in on the action. So, of course, Amazon's taking a lot of this spending share, but other retailers are trying to benefit off the wave and the coattails of what Amazon's doing and get some of their own retail share, which makes sense to me. But we're seeing that Walmart, Nordstrom, Target, other big retailers are trying to jump in on it. Walmart had a huge sale last week as well. So they're trying to get those share of the dollars. If everyone's going to put it to Amazon, that would hurt other retailers in the sense of they need to be competing with Amazon during this time and do something earlier. It looks like Walmart did something earlier to try to take those dollars away from Amazon, right? Because people only have a certain amount they can spend. So this makes a lot of sense. It is quite interesting. Amazon's Prime Day sales during the first 7 hours on July 16th were up almost 12% compared to the previous year, with the average household spending $100 during the event. Market research firms predict a significant increase in sales for all retailers on the platform during the 2 day event. So yeah, people are spending, the consumer must be in good shape if people are going out to spend. You know what else they're spending on? Music, tickets. Taylor Swift's latest album out earns the next top 10 LPs combined with the growth hacking strategy. So I don't normally do Taylor Swift stories, but this was interesting enough. Her new album, Tortured Poets Department, has been number one on Billboard for a chart breaking 13 weeks straight. I didn't even know that. And it's been released 13 months, 3 months ago, excuse me. With sales and streaming continue to dominate, she's sold nearly 2.5 million copies of TTPD. Wow, that's kind of crazy. Um, she's going, that's really impressive, especially in this time where it's hard to sell albums before it was really a lot easier, and now it's much harder. Streaming numbers, all these different things make it much harder to sell. Swift contributed 2% of the entire music industry sales last year, and she's the top earner for her record label, Universal Music Group. UMG, gotta love having Taylor Swift on there. One album, 30 plus versions. TTT dropped. There were four versions fans could buy, each with a different bonus track. That's a cool strategy. Actually, I actually think that's really cool. You don't see people. She puts a lot of work into her team. They put a lot of work into what to do. I would give them credit. So that's quite interesting what she's doing. I actually want to keep our eyes on music, what's happening in music. It's always interesting to see. We talked about Amazon already, Amazon's Prime deal. So Google, this is interesting. Google may be making the biggest acquisition ever in a bold cloud boosting move. So Google parent Alphabet is in the late stage talks to acquire a cloud cybersecurity company called Wiz for 23 billion. This would be their largest deal ever, given its cloud biz, which is trying to catch up to Microsoft and Amazon, a stronger selling point. So of course, one of the big things that big tech companies right now are focusing on is cloud. Of course, we know AI. They're also focusing on cloud. They're also focusing on cybersecurity. And so the more services and offerings they have for the market, the better they compete. And Google seems to have identified a cloud security company that has services and offerings that they would like to fold into their big operation. And they're looking to do it. And this will be their biggest acquisition of today. They show this chart, which I think is eye popping. Look at what Google has done as far as its 10 largest acquisitions. And this is a one that almost doubles the next biggest, which is Motorola, that Google did for 12.5 billion. Um, Interesting. Look at all these different acquisitions. YouTube is 1.7 billion. YouTube is now on a standalone company. People think it's worth about 500 billion, right? So acquisitions is a big part of the play for big tech companies. Other people, competitors, folks, smart people are making their own companies, and Google's able to use their amazing hoard of cash to buy and fold those companies in. And so this one may be the biggest one, and we'll see if this deal gets done. Wiz acquisition could help the search giant diversify from advertising, where it makes most of its money. Of course, we know Google search makes most of the money for Google. Google's cloud revenue did reach 9.6 billion in Q1 compared to its advertising business, search advertising business of 62 billion. So Google's looking for other ways to diversify revenue, and that's one of the ways. Cybersecurity is super important. The number of U.S. data breaches rose 78% last year. 82% of them involved data stored on the cloud. AT&T, they just recently said that they had been hacked through a third-party cloud storage company, accessed 6 months worth of calls and text messages of nearly all its customers. So all of us AT&T people, there's 6 months worth of records of our calls and texts, not the information in within them, but our calls and texts and the numbers we texted and called from, I think it was like October 20 something, 2022 to whatever, 2022. They're out there. They have it. There's nothing we can do about it. But maybe, these security firms are doing a better job to bolster that cybersecurity. And so you can understand why Google is making that play, because people are going to focus on that, because all the data in the cloud, all of our data in these language models, they're at risk. And yeah, they're at risk. That was our big news updates of the week. A lot going on, a lot going on. Let's jump into question of the week, which I think we had a couple good ones. Couple good ones. The number one being, what is the number one thing that makes Americans feel wealthy? I think that's time. That would be for me. I have the ability to do what I want when I want, but I think for other people, it's going to be something else. But what is it? A sense of well-being. I think we did this one before. It's a sense of well-being. So that's just like emotional security, right? Like emotional security, a sense of security, well-being, that you feel fine, that your family feel fine, you're healthy. I think that's a big thing. Stress-free, anxiety-free. All those things are a sense of well-being. So what does that mean to you? Let me know. I think we might have touched on that one, but for our listeners that haven't seen us do it, you now just did. You now just did. Let's jump into one more. I love these. What percent of Americans paid a late fee in the last 12 months? Late fee. Okay, so we're saying they missed the initial payment and they had to pay a fee for being late. I would say not that many. I would say 20%, 37%, 37%. All right, a little bit higher than I expected. 37% are letting late fees go through. Sometimes you miss it. Sometimes it happens. Sometimes a lot of companies still sell bills and invoices through mail, which is probably annoying. And you may not get it. Email, digital, best version, best way. Ladies and gentlemen, that was the Your Money, Your Life podcast, episode 233. We do this every week. Make sure you share with your family and friends. We are again going to be out of office 7:30 to 8:14. We'll let you know. I'm trying to get the podcast episodes done so that we have something to feed the streets with. But we will be talking soon again.